I just assume everybody understands what's going on in Windsor, which is not just economic growth, it's literally generational change.
Yeah.
They don't fully understand how big the battery plant is that Windsor's getting. Like, it literally, you can take the entire battery production of the United States and you can fit it in that factory that Windsor's getting. And you still don't match what that Windsor plant is going to punch out.
Wow.
We're getting one of two world-class research and development facilities. The other one's in Germany for battery research. There's going to be 650 PhDs and engineers in that place. Where are they going to live? They're all capable of buying $1 million homes.
Yeah.
Where are they living?
Yeah.
Amazon's coming, 120,000 square feet. It's going to continue to put pressure on the supply of real estate. So think about this, Mr. and Mrs. Investor. Do you think it's a good time to invest in Windsor?
Hello, everybody. Welcome to the Canadian Real Estate Channel. My name is Zack Brittain with the Rhys Brittain Real Estate Team in Waterloo. And today, Rhys Trenhaile from Windsor, the Vanguard team, is here to school us on everything Windsor real estate and more. Rhys, how are we doing down in Windsor today?
Yeah, good, Zach. Good. Milder temperatures than up there, man.
Yeah, we weathered the ice storm. You guys are keeping it cool down there.
I heard about that. Yeah, we were +7 at the time. So.
Oh my God. Windsor, the tropical paradise of Southern Ontario. That's what we're going to start marketing it as well. For anybody that's new to the channel, Rhys is a wealth of knowledge, has a ton of experience in a lot of different stuff in real estate, not just one particular factor. So Rhys, for anybody that's new to the channel or new to you and your team, give us kind of a quick rundown of your experience and what your team does down in Windsor.
Sure. Yeah, I started investing. You guys can do the math. I started investing 25 years ago when I was 22 years old.
Woo!
Use the fingers and the toes. Yeah.
So we're in the 90s.
Got into real estate sales after So I became a lawyer. I didn't practice. I got into my passion. I got into real estate, and that has developed into a mature, established team of 7 real estate agents that all specialize in specific income property niches.
Okay.
So if your strategy is a house and adding an additional dwelling unit, that's my teammate Stephanie Saunders. If you're a condo strategist, that's Sadie Morrow. If you do just duplexes to sixplexes and maybe sprinkle in a few student rental properties, that's Steve Jarouge.
Okay.
And then
so
if you go
as
larger,
our experience in our market kind of grew and stacked, you guys had the capacity to say, okay, we need specific people that have like A+ experience in each space. That's pretty cool.
Yeah, there was nobody in Windsor. I mean, you're going back 20 years ago, but there was no agent in Windsor that was really a sort of raising their hand and saying they were the income property specialist. And if you think about it, that's an entire category of real estate sales. It's not even a niche, right? It's a category full of niches. And I just tried to drive the biggest wedge into that in what we've become basically. And I wouldn't have known this when I started. We've become a vessel and essentially like a real estate financial advisor, largely to general Toronto area investors.
Okay.
It's been like that for 20 years. That's where most of our investors. Yeah. And I don't want to insult you, Zach, but I would include the Tri-Cities in that. I include Waterloo.
Oh, come on. Get out of here. I made a video specifically on that. We're not part of the GTA.
You're GTA now.
Oh,
They've stuck you in. It's like the Borg. It's like the Borg. You're getting assimilated. You're going to have a goat trigger in no time.
Locals will riot. Well, for everybody that's new to the channel or you don't know a ton about Rhys, your team, like you said, 7 agents, you're doing about 200 transactions a year, everything from your residential stuff all the way up to larger developments, all in the Windsor and the surrounding markets, right?
Yeah. We've delved now into private equity. So myself and my teammate Reed Renault, we are joint ventured with a real estate income trust out of the Toronto area. And we're converting about 150,000 square feet of old office space
Cool.
in the downtown core and converting that into badly needed residential. And it
Very
worked out
cool.
to about 200 beds. Yeah.
Very cool.
Yeah,
And just
it's cool, man. It's part of the journey. You know what I mean? It's been a blast. I really started learning private equity back in 2017, and to parlay that into where we are now, it's been great. It's been humbling, man. It's a little bit of luck involved in that, and yeah, it's been great.
hey, I'd rather be lucky than good any day of the week.
Yeah.
So if you guys are watching and you're thinking, I need to pick up my first investment property, Rhys has somebody on the team for that. If you're looking to scale or you're past scaling and looking to level up, then get in touch with Rhys, whether you're working directly with him or one of his specialists. This is the place to go. Now, I think you do have a rundown of our market as well as a bunch of other things that other investors and people on the channel are going to find super interesting. What are we going to be looking at first?
Yep. I'm going to go through some of the monthly statistics in
Excellent.
the Windsor market. Yep. And essentially how that applies to you as an investor.
Perfect.
Right?
Okay.
Yeah, and I got some really good nuggets actually on timing. There's some really interesting timing right now for investors. Yeah.
Does that matter?
Oh, timing. Yeah. We're gonna go through that right now. So yeah, I'm just waiting on Peter. Does Peter put there it is?
Oh yeah, Peter's got us covered.
Peter is the wizard, man. He's the wizard behind the curtain.
Awesome. Oh, and hey, I'll just mention real quick, info at thevanguardteam.com right there. But if you guys are looking to get in touch, all of the contact methods and everything you need to know to get in touch with Rhys and his team are going to be in the description below. It's really easy to get in touch with these guys and ask any of your questions or concerns. But I think we're going to answer a bunch of them right now. So let's get into it.
Yeah, let's do it, man. Yeah, we got a little bit of bragging right there too. Top 100,
go.
Top 100 teams, and
is that
we
good?
Didn't have to solicit that. They came looking for us. Yeah.
Is that good?
Yeah.
That's awesome.
I was flattered.
Yeah, that's pretty cool to get recognized.
So many of those awards are BS, but we like the gold coin. So
yeah,
REP is the good one. So
that's awesome.
Yeah. Okay. So sale. You want me to do this as a salesman? Sales are only down 46.6%. There you go.
So just so everybody's watching, now you know if you're working with Rhys, you know when he's turning on the sales voice, so you can smell out some bullshit.
That's me shining things up.
Yeah, we're down. So this is volume of sales down 46% compared to last year.
Yeah, what I think is interesting is, and again, I always think in terms as an investor in chunks like 3 years, right?
Yeah.
And even right now, this is not in my presentation today, but I will say this: if you're looking at getting a new mortgage right now in an income property, we've done a lot of studying on this. We've referenced a lot of chief economists on this. Always remember, chief economists at banks, they have access to more data than anybody else because they can see the behavior patterns of us as we're using the bank services.
Yeah.
So chief economists like Benjamin Tal at CIBC, the chief economists at RBC, et cetera, they have a ton of information that they're relying on when they make their conclusions, as opposed to an economist that's working for a labor union or a university. They don't have access to the same data. In saying that, we've concluded you should do 3-year fixed mortgages right now.
Okay.
Don't do 5. If you're going to go 5-year on a mortgage, do variable because you'll benefit from the interest rates going back down in years 4 and year 5.
Yep.
But this is probably the first time in my career in 20 years that I've recommended a fixed rate over a variable. I think a 3-year. Yeah.
I was just going to say that's not necessarily common for a lot of investors, especially a lot of people who are invested in real estate themselves that are like you and I, who are agents representing clients.
Yeah.
You know, that's not necessarily our decision, but your financing options as an investor directly go into the types of properties or the types of investments that, you know, I recommend and you and your team are going to recommend to your clients.
Yeah.
And are you noticing that your financing professionals that you and your clients do business with are seeing a lot larger volume of those shorter term fixed rate mortgages right now too?
You know, I don't think there's enough data yet, Zach.
Okay. Fair.
Yeah, because I think until very, very recently, I mean, we didn't know what was going on.
I think that's the honest answer too.
Yeah. I mean, no, I don't. I think everybody was kind of waiting. And what it did was, and segueing back to the graph, what it did was it created a sort of a Mexican standoff between the vendors and the buyers. There's no investor on the planet that wants to buy, or to use the phrase, there's no investor that wants to catch a falling knife, right? So in other words, you want to wait to see where the bottom is going to hit. And that hit about 90 days ago in Windsor.
Mm-hmm.
And now you're starting to see the prices sort of bottom out and flatline and start to creep up.
Yeah, we've seen something very similar here in Waterloo Region. Really
Yeah.
aggressive drop, a little bit of, oh, what's happening? And now we have at least 2-3 months of like pretty steady, maybe down 1%, 0.5%, depending on the market segment, month over month. But it's really kind of tapered off. And it seems like that's going to continue down in Windsor as well, with the volume of sales kind of diminishing with the seasonal trends, I'm assuming.
So yeah, so now you've also got those seasonal realities, right? People don't go out, and I'm going to talk about this in a second, but people don't go out and buy during Christmas or when there's 2 feet of snow on the ground. There's fewer buyers that go out and they wait for the spring, right? For the
Yeah,
snow to
this
melt.
is true.
So coming back to the graph, what I really love about this one is you can see that things have been pretty darn steady
Yeah.
overall. And look, let's average the last 3 years for a second.
You're pretty much right on the 10-year because you had such a crazy seasonal trends just didn't apply last year in your market, it seems like.
We, yeah, so I don't know what happened up with you guys, but basically back in January, well, I think actually I do know rather countrywide, in January this year, there was only 36,000 homes for sale, which was the lowest number they've seen in generations. And of course, that becomes a supply and demand issue. So the prices
Absolutely.
went up like crazy. They went up in Windsor between January 1st and March 31st. They went up 36%. Okay, so Windsor, Ontario should never be going up 36% in 90 days, like ever.
Let alone in a year or a
Yeah.
2-year window. That's crazy.
Yeah, and we literally had to tell our investor clients, the buyers, to hold off. Like, there's no way this is sustainable. Like, there's just no way.
It's good advice, though.
It came back down. Like, it came down 25%, and I had a lot of clients thanking me. You know? Yeah, we went out of our way to discourage them, and that really sucks. Because you're literally telling your clients, yeah, we don't want a commission, right? From our own perspective.
Which, just to be clear, is something that you'll only get from an honest real estate agent, right?
I would say it from an agent that's not hungry.
Yeah.
Like, you're probably like us, Zach. Like, we're busy. Like, we've got a lot of sales pretty much all the time, and you can play the long game with your clients. Like, the whole thing with us is, and this is the difference, guys, between a residential agent and an income property selling agent, is a true income property selling agent is really interested in making you wealthy. Because the more wealthy you get and the faster you get wealthy, the more income properties you're going to buy from us and the more commissions we get. Right? That is the capitalistic win-win scenario that an income property specialist real estate agent understands. And with all due respect to my residential counterparts and peers, they don't get that. Right? They're going to sell you a property and then they're going to go flying off like the Tasmanian devil in a tornado with a knife and fork. And they're going to go flying off to find the next, house to sell to the next client. They're not thinking of you as a repeat client to take care of over time. So, there's a big difference. Yeah. What the heck is that? Oh, it's a money machine.
That was money advice.
Thank you.
I would just like to stop everybody in the video right now, not just considering, who you're working with, but what their goals are and how they view you and their business makes a huge difference. Yeah. Somebody with an investor mindset will naturally have a little bit more of a long-term view and a long-term commitment. They're going to be in the business for 5, 10, 15, 20 years, and they're thinking, how can I improve the success of my clients over the life of their investing journey? It'll only improve your bottom line. It'll only improve your ability to build wealth. And in turn, their business will reap a benefit. So that mindset is something that we bring to our business. And I think everybody else on the channel thinks like that. That's why, the viewers here on the Canadian Real Estate Channel have such a good response. And that's why you've had success that's just continually stacked every year down in Windsor.
Well, that's it. When you take care of people, like we just listed and sold 3 condos for one of our condo investors. Mm-hmm. And he reminded me, and I kind of forgot with time, he reminded me that he wanted to sell them 4 years ago. And I told him, no,
don't do it yet.
Where are you going to put the money? He goes, I'm going to put it on the stock market. I'm like,
our market
your prices, I'm trying not to say his name, your prices are going to go up from everything we see. by a wide margin coming up. You got to hold on to them.
Yeah.
And he's like, yeah, man, like you told me to
That's
hold
good
on to them. You
advice.
made me a ton of money, right? Like, so that, but that's our job. Like literally, 4 years ago, I'm saying in layman's terms, I don't want 4 real estate listings, right?
Yeah.
It takes a certain type of group to do that. And I mean, with my agents, I'm called upon, I would say 5 or 6 times a year, because their buyer client is not listening to them about not buying a certain property. And they'll call me in to be a second voice.
Yep.
To say, hey, don't do this, because they know, and again, there's a vested interest for them. They know that they're not going to make any more commissions off that person after they buy that property, because they're going to be stuck.
Yeah, absolutely.
Right?
And that's
It's
so
vested
important with
interest.
that first deal as well, or an investor that's new to your market, is making sure you don't lose money and you're setting yourself up with a margin of safety with multiple options for your first deals, especially for newer people coming to your market that aren't as well versed. So I just wanted to reiterate how important that is, especially as as a younger person myself and as a newer investor. That's something that I focused on, and it really helped set me up for success. Now we can take that to the clients, just like you and your team are doing, and they're gonna ultimately, they will profit a lot more and they will learn a lot more a lot quicker. So I think that's good advice.
We're playing the long game when it comes to wealth building, right? So
Is real estate the long game, Rhys?
come on, man.
Just a friendly reminder. Just a friendly reminder to everybody.
Question we'll get this week. Yes.
Yeah.
I mean, look, 80% of the world's wealthy got wealthy off of the investment into bricks and mortar, into real estate, right?
Yep.
And so what when I say we think of ourselves as a financial advisor for real estate, I mean, quite frankly, we are the ultimate financial advisors. I know these other guys call themselves that, but they're selling stocks and stuff, and 80% of the world did not get wealthy on stocks or crypto or anything else. They got wealthy on real estate investment.
Start with real
80%.
estate, build your base, then improve.
Yeah. So I think look, maybe I'm tooting our own horns here, Zach, but I consider us amongst some of the most important wealth building people, in Ontario. I think I truly believe that.
If you have the right mindset, if you have the client's best interest truly in mind, and you have enough experience and a good skill set, you can dramatically improve people's ability to generate and keep wealth. And that's an incrable power. So and I think
we try, man. Yeah.
That's awesome. That's awesome.
All right. Now that we've blown smoke up our own behinds, we'll get back to the numbers. So the sales are down right now, but we all truly believe now that because you're now seeing a plateauing with the interest rate rises from Tiff Macklin and the Bank of Canada, you're starting to see that stabilize.
Mm-hmm.
You're seeing the prices now stabilize, and in fact going up. I think the average is about $8,000 over the last 90 days per month in Windsor. Yeah, I'll get to that in a sec. But what you're seeing is the stabilization now. So the buyers kind of either instinctively or rationally understand that you are now hitting that bottom, that market correction from the stupidity of January through March is gone. The correction has happened, right? But if this was now June or July, I think you'd already see it starting to fly again. And you're not. And the reason you're not is because it's Christmas season followed by 2 feet of snow in January and February. And I'll get into more of that in a second.
Interesting.
I really like this graph as well, because year over year now, the average price is down almost 10%.
Okay.
Right? But you can see what happened. I mean, you're not going back that far ago. This is, for the people that are a little younger, 2012, 2013 is when the Canadian economy really started recovering from the global meltdown.
Yep. We were flat. Most markets were fairly flat between kind of that 07, 08, 09 to 2012, 2013.
Yeah. So for Windsor, we started coming back again. As you can see, like this is almost like a geometric curve. You can kind of see the curve to it. It's not a straight line.
Yeah.
Right. And that only goes so far before it comes back down. But what you're going to see is start here and end here in your mind. And do you see the straight line?
Yeah.
Because I see it. I see a straight line, right? And this comes back to the fact that with the exception of a few major cities like Toronto, Vancouver, all the other cities since 1867, which is Canadian Confederation, have gone up by an average of 5% a year. It's a straight bloody line. And here I am seeing the straight bloody line again, right? I know that we were behind. So you can see here that we were kind of flat at the beginning of the recovery.
A little bit behind, and then came back with some vengeance the last 3, 4, 5 years.
Right. But we knew it was going to come back.
Yeah.
We knew there was going to be a springboard because this was way under. It was like 2%, 3% property appreciation per year. We knew the norm was 5%.
Yeah.
We knew we'd just been hit by about 20% price drops through the global meltdown.
Interesting.
So we knew that it was going to come back to that line, man. It has always come back to that line. The the Great Depression in the 30s looks like a little divot on that line, right? So we kind of know that it was coming back, and you've got this 5% per annum line basically through here.
Yeah.
Right. So I'm happy with this. Properties are cash flowing in Windsor again, because the rents are now up and haven't come back down.
Well, let me ask you this. Are
Yeah.
rents in your market more sticky than purchase and sale prices, in the sense that once a rental rate typically goes up, it's harder for it to come down, more so than it is for a price point of a property to come down?
I right now that's the case because you have a net effective vacancy rate of 0.
Yeah.
And I think everybody has seen, it's funny actually, because I just assume everybody understands what's going on in Windsor, which is not just economic growth, it's literally generational change.
Yeah.
And I realize as I talk to people, like we do articles, for example, for Crew magazine. I don't know if I'm supposed to say that or not. Sorry, Peter. But, talking to them in the GTA, like they don't fully understand how big the battery plant is that Windsor's getting. Like literally you could take the entire battery production of the United States and you can fit it in that factory that Windsor's getting. And you still don't batch what that Windsor plant is going to punch out.
Wow.
We're getting one of 2 world-class research and development facilities. The other one's in Germany for battery research. There's going to be 650 PhDs and engineers in that place.
Wow.
Amazon's coming, 120,000 square feet. I haven't even gotten into the infrastructure yet, but once you have that battery plant, you can't move the parts of that battery too far because they're more fragile. So they want the whole supply chain around the battery plant.
Yeah.
So now we're getting all these South Korean companies and German companies and they're all coming in, and they're basically saying, you guys need to find another 200 acres for industrial development, right? And then Doug Ford, the Ontario Premier, is scrambling to get to literally more than double the electricity capacity for Windsor Essex.
Wow.
In the next 4 years, we need double the electricity, 100%, 105% more juice.
So,
just for point of reference, the rest of Ontario averages about 5% more. So think about this, Mr. and Mrs. Investor. Do you think it's a good time to invest in Windsor? We're also getting a $5.1 billion bridge, because now it's gone over budget. I can say 5.1 now. We just finished a $2 billion freeway. We're about to build a $2 billion mega hospital.
Yeah. Would those things be happening or even be planned, let alone executed on, if there wasn't a clear sign of sustainable growth to fit this level of investment? It's not like, the paving budget went up a couple $1 million for the city. It's we're investing in long-term hard assets that are going to take billions of dollars to execute. And I don't think they're going to go ahead and do that if there isn't a clear path to success.
Yeah, it's going to continue to put pressure on the supply of real estate.
Yeah,
we're already struggling, do not have enough for the population that we have down here, because we have a net immigration of people down here. We're one of the 6 cities in Canada that gets all the immigrants.
Yeah. It is a fairly common landing spot, is it not?
It's a huge one. Yeah, we're the second most ethnically diverse city in Canada behind Toronto.
What?
Yeah. Number 3 is Vancouver.
I'm dropping knowledge, but I did not know that. I knew it was up there. I did not know that.
Zach, if you played soccer in Windsor like me, you would know that.
Yeah, I was a lacrosse guy. I can insult
189 different countries on the soccer field. Yeah.
Respectfully, of course. Respectfully, of course.
Depends how you feel at the time.
I love it. I love it.
No, they're all your friends. Like,
That's
actually,
awesome. So
playing soccer was great for real estate sales. Like, the soccer community is so bloody loyal.
yeah, you guys are
And
crazy.
I mean, I haven't played with these guys now in, 10 years, 12 years, and they'll still all use you for real estate. Band of brothers, man.
That's
Yeah.
awesome.
Oh, it's
So,
great.
to recap, before we go on to the next slide,
Yep.
we're getting huge commercial and industrial development.
Mhm.
Infrastructure is getting pumped a lot more than it has been for the last 20 years. And we do have a hot landing spot for a lot of newcomers. So we have an influx in the next few years of skilled labor coming because a lot of these developments are going to be done. There's big boy companies that are moving in to establish, key, components of their Canadian and North American operations, like your Amazons, like this vacuum plant.
Yeah.
And I'm assuming a lot of that is making the supply of rentable space or property to purchase, whether you're in residential or even commercial, is all fairly low. I'm assuming that it's just tough to find stuff, period, because there's such a demand.
Yeah. Last month, I believe I touched on it, I think. But yeah, industrial is just through the roof. You can't get it.
And the trickle down, I think it's more important for us residential investors. I think it's easy to make that connection, but just to reiterate, the trickle down effect of these investments in industrial and commercial space, it means jobs, and jobs means skilled labor and unskilled labor. And it means people can afford to pay rent, and people need a place to live if they're going to work in these places. And that would put the pressure on our residential markets, which you've seen aggressively.
650 PhDs and engineers just in the research and development facility.
For one facility, guys.
Where are they going to live? They're all capable of buying $1 million homes.
Yeah.
Where are they living?
Yeah.
What, like, we don't have.
Well, and you know what? Let's even take it a step further. Where do you think they're investing their money?
Oh, well, locally, of course. Yeah.
Shocker, right?
Yeah. Yeah.
That's awesome. All right. So we got average prices year over year, just to recap for the viewers here. We're down 9.4%. And this is across all residential.
It is. Yeah.
So
yeah. It's a catch-all.
Pockets. If you guys are looking for specific pockets, I don't know if we have this data coming up, Rhys, but if you guys do have specific questions, so like if you're like, I really want to look at single family homes or townhomes or condos, then you can reach out to Rhys and his team. I can tell right away, and I know the viewers can too, very data driven and rely on the hard stats and numbers, which is important because it helps you interpret and get more context to make the right decisions. So if you're looking for specific data on segments or types of property, email them. I'm assuming info@thevanguardteam.com is the best way to get in touch, and they can follow up with the appropriate information and resources. I know that's something that a lot of people from the channel need, and this stuff is great. This is right up their alley.
Right on. Yeah. Well, one thing to remember before I move on, 500,000, that range, Windsor's affordability is #1 of all major cities. So if you take a percentage of the average, if you take a percentage of the median family income and look at what percentage of that has to go to putting a roof over your head, Windsor's the lowest number.
So would that imply that there is a lot more room in terms of affordability in your market compared to market centers like Waterloo, like Toronto, like Markham's, all that?
Yeah, you're stealing my thunder. Yeah, that's the no, but that's good. That means you're seeing where it's going. Yeah, that's exactly the summation of it is essentially that is you have because it's the most affordable. You actually have the highest net disposable incomes in Canada of any major city in Windsor.
Interesting.
Yeah. So when you
I wouldn't have guessed that, honestly. For Windsor, I would not have guessed that.
Well.
But now that you say it,
because Waterloo is part of the GTA, Zach. I'm just joking.
We're definitely going to get into it.
Oh, you know what? I have to say this. The GTA has gotten so much better in the last 20 years. When I started in the business, I was so confused because anytime somebody was calling from the 647, the 416, or the 905, they thought like RoboCop and the Four Horsemen of the Apocalypse were going down Main Street and all the houses were burned out in $1. And I'm like, why do Toronto people think like this town?
Yeah, we're just off the 401, guys. Like this isn't a different country.
So we literally, this is a true story. We literally had to, whenever somebody called from one of those area codes, we don't have to do this anymore, but when somebody called from one of those area codes, I had to train my team to stop selling the property. And your entire goal is to get them physically into Windsor.
I mean,
and literally we'd have them pull into Manor Realty and we'd come outside with a stopwatch. This is the truth. And so we greet them outside. We wouldn't bring them into the office yet. We greet them outside. We'd pull out the stopwatch and we would say, okay, tell us when you see a beat up, rusted old car. Go. And it usually took 2 hours and 20 minutes, 2 minutes and 20 seconds. That was the average, where Mr. or Mrs. Krankovich would say, I haven't seen one yet. Okay, let's go inside.
Yeah, we've proven a point that you're about to understand in a little bit more depth. Let's talk.
But we legitimately had to do that 20 years ago. You don't have to anymore. And I think it's because with the internet and with people moving down here to retire from the GTA and people seeing that they're living in really big houses, and when there's a foot of snow in Toronto, people are in shorts down here. They start realizing that, oh, maybe it's not what I thought it was, you know?
Yeah,
so
there's a lot of perceptions.
I've noticed the perception's gotten way better in the last sort of 5-10 years.
And I also think the freedom of information, but also how quickly your market has changed in the last 10 years, even the last 5 years, to be honest, how quickly that's made that change, and how easy people can find that information plays into it.
That's what I mean, right? It's access to data, whether it's anecdotal through Facebook or whether you're doing research.
Yeah.
You start realizing, oh yeah, you know, Rural Cop and the Four Horsemen of the Apocalypse don't go down Main Street in Windsor. Yeah.
No.
Yeah. Residential active listings. I wanted to show this because the market activity is down about a sixth.
Yeah.
Right? And what I find that's really, really interesting on this is you already had market activity way down because we just didn't have enough listings.
Okay.
Right? Market activity is not just sales, it's also like listings getting posted, right?
Yep.
But this is starting to happen. What's happening is you're getting now more listings available to buy.
Okay.
So the pressures right now are not on supply and demand as they usually are. You're getting more to choose from. More to choose from means less competition, means better prices, right?
Yep.
Very important to know this. So this activity that you see here isn't sales going up. That activity are listings going up.
Okay.
Right. That's the net. That's the net gain. The net gain and activity right now in the market is that, which is really, really good. All right. I always love showing this because investors get really excited when they realize that the bulk of the sales in Windsor right now are between, you know, like $100,000 and $600,000.
Yeah, and just off topic, not completely off topic, but I think this is really cool to look at too, because then people can realize where they would fit into the market. So if you are a buyer and you think you're going to fall in the $400,000 to $600,000 price range, and you want to buy property in that month, you are one of 88. So, and especially if you want to get the best deal out of those 88 people, like you're really going to have to understand what the market's like for those types of properties, your target listings and your metrics in that price range. And it's clear like you guys look at this stuff, but for me personally, like just give yourselves a little bit more context as a buyer or as an investor on where you fit in. These types of numbers are really helpful for that, I find.
You know, it's funny, man, because I've moved up to the bigger buildings, but I still get really excited when I see, you know, 30 sales under $300,000, 52 sales under $400,000. It still excites me, man.
Because it's a deal, baby. It could be a deal.
That's what it is. That's what it is. Yeah, and I can tell you as well, we are just about to list our first 4 power of sales. I haven't done a power sale in, geez, I bet you 3 years.
Yeah.
You know, and now we're being asked by a lot of the smaller lenders that are sort of investor based. We're being asked by them to list properties again. Very interesting. Yeah. Okay. Yeah. So you're starting to see
that you think will continue, get worse, or just kind of be fairly slow and steady?
You know, Warren Buffett's got an anecdote that I'm going to completely butcher, but it's essentially that when the tide rolls out, it exposes the garbage. So I find when you have a market tighten for whatever reasons, either it's a recession or it's an economic slowdown or it's Tiff Macklin trying to put pain and pressure on us by increasing the interest rate, right? Yep. At the Bank of Canada level. regardless of the reason for that pressure, what ends up happening is it's the weakest to fall out.
They'll be the
Right?
first to go.
They'll be the first to go every time. Yeah,
Yeah.
I still remember during the global meltdown, man, vacancy rates went up to 17% in Windsor. And I still remember sitting at my desk going, oh my God, my clients are going to kill me. And nobody was calling to complain. So I started calling them. And they're like, yeah, no, we're good. We're good. We're 0 to 5% vacant. No, we're good, Rhys, 0 to 5. I'm like,
perfect.
And it dawned on me, vacancy rates are not homogenous.
Nope.
When vacancy rates are 16%, they're not 16% across every building. The best 1/3 of landlords and the best 1/3 of properties available for rent, not available for sale, available for rent. The best 1/3 are always 0 to 5% vacant, doesn't matter what market it is.
Yep.
And then if you're in that next tier, that sort of 33 to 66%, you're in the middle, you've got an average property, you'll have to fight a little bit for, to keep winning and keep gaining, keep moving forward with your property during the, the worst markets.
Yep.
But the slumlords at the bottom end, man, they were 50 to 100% vacant during the global meltdown.
Yeah. Unorganized, poor condition, poor managed properties, poorly managed advertising and marketing to get good new tenants in there. And, it's like any type of business in that sense is, the top third, the top 20% is going to be consistent. They're going to continually maintain and grow, and working with people that have, whether it's experience or some sort of competitive advantage, would help any investor, regardless of your market. I think that's really good advice.
Yeah, basically, as a rule of thumb, try to invest in the best 1/3 of what's available. If you buy something that's in the middle, bring it up to that top third. Because look, guys, it's not just about maximizing your profits. It's about your safety of investment. And I hate to come back to us, but that's a lot of the reason you work with income property specialists that also own income properties, because we're going to keep you out of trouble, try to get you into the best properties. It's never foolproof, but we're going to keep continually trying to get you into the best properties. But we're also investors. You can use the same property managers as us. You can use the same tradespeople as us. You can use the same real estate lawyers as us.
Yeah.
Same
and
brokers.
I think using the same concepts, but taking the concept into execution is huge. Like, I love that idea of the thirds. Is if you're not getting the top third of your market in terms of quality, location, whatever it may be, your key criteria, okay, go to the next third, but in that segment, make sure you can bump it into the top third.
Yeah, and that's not a high threshold. Let's be honest.
No, it's not, but it's a good general concept to understand. If you guys are watching the video, if you're thinking about getting into whether it's Windsor or any other type of real estate investment, that general concept is kind of a good rule of thumb to understand which segment you're getting into and which segment you want to be into. I think that's good advice for long-term success.
I feel like this particular video, I feel like Grandpa Rhys, right? Gather around, kids. Let me tell you about what I learned in my last 100 years in investment.
Come on in.
So this is coming back to something I've been teasing through this video. Best time to buy. You're all staying home right now. You got Christmas on the brain. And then it's going to be 2 feet of snow and -17 out. And most of you stay home.
Who wants to make some money next year? It starts now. Who wants to make some money?
I haven't seen cash in a while, man. I'm a plastic guy these days. So I want you guys to please understand that one of the best times of year to invest is between December 15th and February 15th. Because
every year
buyers, they're staying home, man. They're hunkering down, they're hibernating. And we find it's hilarious. Like, Zach, every year I see that one trade record come in for a sale on December 23rd.
Yep.
Because there are a group of investors that already understand that the best deals. Think about the attitude of the vendor, right? Oh man, this can be an early Christmas present for me. I really want to sell this place, right? They're already feeling good, and they're around family and everything's warm and fuzzy and happy. That's when you want to make an offer to a vendor.
Yeah, that or they're really motivated, or a combination of.
Sure. So this is a great time of year to invest, and quite frankly, there's a double thing coming. I think when the snow melts, in March around here, you're going to see all the buyers coming back. So let's say let's say there's 20 income properties for sale and 3 of them are the best, right? You want to try and buy those during the months where the other sophisticated investors are hunkering down at home.
They're not as active.
Well, because they also know that they're the top 3 properties for sale.
Yeah.
When the snow melts, you've now got competition for those top 3 properties.
Yep.
And I think the other thing that's going to happen, just sort of in a sort of more macro sense in Windsor, is I think the snow's going to melt. You're going to get a ton of buyers flying back into the market, and they're going to realize there's not enough listings again. And I think this supply and demand issue hasn't gone anywhere. I think it's just on hold, and it's coming back, man. We do not have enough housing for rent. We do not have enough housing to buy.
So if that's the circumstance and there's less buyers or investors out there looking for the next 30 to 60 days, then a better chance to get a good deal, but also have to compete with less people to do it.
Yeah. I think it's a great time of year for it, man. Yeah. And my agents, I try to get them to slow down on work, but they're workaholics. They'll work right through Christmas for you. It's amazing.
Well, when you love what you do, you don't work a day in your life.
And there's a lot of truth to that with natural salespeople. They love my team loves doing what they're doing. Nobody's like, oh, this is a job to me. Like, it's passion. They also invest in it. Steve on our team is co-invested in a property management company. I mean, it's everybody eats, sleeps, and breathes it on the team, man. I love it. Yeah. Speaking of team, this is our newest guy, Jason Balsden.
Jason getting the spotlight. Jason at the VanguardTeam.com. Let's go.
So for people that are watching this and they still haven't bought their first property income wise or just their own house, what Jason is doing is he's getting those people that are approved, let's say in Toronto, for a $400,000, $500,000 mortgage. He's getting them to do one of 2 things. You either stay in Toronto, you keep renting, but you buy down in Windsor and you start creating equity. You start building up that equity and you start building up that wealth.
Awesome.
And so he can do it in such a way that in about 5 to 7 years, you have enough money to buy that house of your dreams in Toronto, right? Instead of just renting for the rest of your life. Mm-hmm. The other thing that Jason does is he convinces you that moving to Windsor and physically being down here is a good idea, right? And then we've got a whole ebook dedicated to it. And this goes for real estate agents and mortgage brokers. If you've got those clients that are stuck and they got a $400,000, $500,000 mortgage approval, send them down to us, right? And, you would not be the first investor. You'd probably be about the 30th investor in my career that would move down here to build up their wealth, get a job down here, but build up their wealth on investment properties down here as they live in them. Using some form of BRRRR strategy normally, where you buy, you renovate, you rent out the units, you refinance the property, get your original money back, and then you repeat the process. Mm-hmm. And if you do that once a year for about 5 to 7 years, you've just created legacy wealth, not just for yourself, but for your offspring. Yeah. Right? Yeah. This is not rocket science, guys. And quite frankly, there's a guy in the United States called Dave Ramsey, who's one of these money finance experts. He's not too well known in Canada. I know about him because my wife's American. But he's got this saying that hits me like goddamn sledgehammer over the head. And I truly believe this. You got to live like nobody else if you want to live like nobody else. Right? If you want to be like your buddies and just keep doing the same old, then you're going to get the same old. But if you really take action, and again, the guy like Jason is going to focus on that full time. Like, I know you don't know Windsor from the back of your hand, but he'll get you up to speed, and you'll see why, if you're stuck in that goddamn rat race where you can't buy, you can't get equity, really consider working with him, man. Yeah.
Awesome. That's awesome. And honestly, the experience to understand what it takes to either relocate or invest in a market satellite that you don't know well is huge. Our business has exploded with people that have been to or through Waterloo Region a couple times in the last 10 years, but know it can be a great place to invest in.
Sure.
And, your goal, my goal just with Jason's is, how do we get you from knowing very little to everything you need to know about your target investments or your target properties as quickly as possible? So you, as an investor or somebody who wants to move, can just transition into a decision maker instead of just confused by all the different ideas and options you think you may have.
Yeah.
Like he can take that from, okay, here's your idea. Here's where you're at right now. I need to go X, Y, Z like this to get you up to speed. And then you can decide if this is going to be right for you.
You nailed it, Zach. That's your guide.
That's awesome.
That's your guide.
Jason. Oh, we even got his phone number too. Let's
There you go.
get ready, Jason. You're getting some text soon, brother.
He's a gentle giant, man. He cares about his clients. We love him. Yeah, he was a great addition to the team.
That's awesome.
He really was. Yeah. Jason right now, to confuse things, has a duplex for sale.
Oh, we even have deals today. Let's go.
Yeah. But I'll give you an idea. There's one of those under $400,000 properties that we know and love.
Yeah.
But this is in an area called Old Walkerville, which is our distillery district.
Okay.
And it's all middle class, working class, and that is like a good meat and potatoes, safe investment that'll cash flow for you over time.
Perfect.
Right. But that's a great example of kind of, one of those simple properties to start with. And you'll also notice in the front, the two gas meters, they're separate utilities. So you get your tenants to pay the utilities on that one.
Awesome. Less friction for you, less to manage as the landlord.
Yeah. And the other nice thing about side-by-sides is the city recognizes those as two separate homes, semi-detached. So ultimately, guys, when you exit, right, maybe you're moving up to a bigger property, you can literally sell those off separately.
Yep.
For more money than, like, if the vendors had done the legal severance, which is only about $5,000, right? They've done the legal severance already, so you have two separate legal titles. You can now sell those two separately. It costs about $5,000. You're now selling those for more money individually than you are as a whole.
Yeah. So
right?
good hold option, but also good exit strategy. More than one exit strategy.
Yeah. Yep. This is Steve Girouge. I know he looks like the father in the Addams Family, but no, we love Steve. I know. I'm joking.
It's too easy. He's not even here. It's too easy.
We're now a part of the show thanks to Steve, because one of his clients
really
is Andrew Cox.
Oh, yeah. I've seen Andrew Cox. Andrew did a video with us earlier this year.
Yeah, great guy. Great human being. He's one of our investors down here. And dynamite guy, another guy who's just got a wealth of knowledge for the Canadian investment network here on the channel. Mm-hmm. And anyway, so it was through him and Steve that I ended up becoming the thorn in Peter's side for
awesome.
Windsor. But Steve specializes in 2 units to 6 units. Nobody sells more in Windsor.
Awesome.
And Steve, so our whole team goal and vision is essentially to get to a point where we have so much passive income coming in as investors that we choose to sell real estate because we love it. Steve chooses to sell real estate. Awesome. Steve could sit on his hands the rest of his life on the cash flow he makes off his income properties.
That's awesome.
Right? Brilliant guy. He'll always be self-deprecating. You'll never know that he's anything, but he's a very smart guy. He's got his MBA degree. But boy, oh boy, does he make people wealthy. Guy's a machine.
I love it.
Yeah. This is a duplex that he is just listing. It's not on the MLS yet.
Okay.
It'll probably sell in the 4s.
Okay.
And you'll notice that the monthly income is a little higher on this one than the other one. So it'll sell for a little bit more as well. It's all relative, right? I don't know. Yeah, 2 main floor units. Yeah.
I was just going to say, both units are on the main floor too. The other one is going to be side-by-side identical units.
Yeah. And there is an alley in the back. And you're almost certainly, I don't think you're quite allowed to right now, but they're changing the rules at the provincial level. You're almost certainly going to be allowed to put an additional dwelling unit in the backyard.
Okay.
Facing the alleyway.
Awesome. So potential value add, or maybe a feature that you could utilize to sell the property in the future to another investor or buyer. Yeah,
and our client, this is actually one of my oldest clients.
Cool.
Guy. Yeah, he was a line worker at Chrysler's, which is now Stellantis. He's now retired. And I would sell him a property like this once every probably 8 to 10 months. Oh, and then once he had about 7 or 8 of them, he says, Rhys, I'm good. I'm just going to ride it out on these. And yeah, now he's selling them off. He's retired and he's made his money. And I see this cycle all the time. Yeah. Oh, can you hear me?
Yep, I hear you now.
Oh, good. Okay. What'd you miss?
8 to 10 properties.
Yeah, so I mean, John, the owner of this property, is a really good example of our investors that started with me, 15, 20 years ago. And now they're at the point where they're retiring
Hmm.
and they've got a nest egg of, 5 million, 7 million, just off a few small properties, right?
Yeah, I think I've pitched this in my videos when I'm talking about my local market, but just like sticking to the fundamentals and understanding that real estate is a long-term game.
Yeah,
If you even picked up, you mentioned earlier in the video, you pick up one property a year, one property every other year for 5 years or 10 years, and you have an opportunity to create almost generational wealth for you and your kids and maybe even their kids, depending on what you're doing and how you're doing it.
yep,
But just to have that opportunity for something as simple as scooping up one property every year, every other year, like it's incredible how quickly you can grow. So that's pretty
yeah.
cool to see clients do that 10, 15, 20-year cycle with you and your team. That's awesome.
Yeah, and look, I mean, John was a line worker
Yeah.
at the assembly plant for Chrysler, right?
We're not reinventing the wheel, a
Put
pretty
together
normal
many bits.
job.
Yeah, and then we just had another client last year retire, sold off all their smaller income properties. They bought a
Awesome.
house on the lake up around Peterborough.
See you later.
Yeah, but with 7 million bucks in their jeans.
Is that good?
That guy was a literal. I mean, God, I love the guy. We'd watch the Detroit Lions lose at least twice a year with chicken wings. Great guy. He came in from out of town. He's from Brantford,
Yep.
and yeah, like literally digs ditches for a living, right? For freeways.
Yeah. We don't have to reinvent the wheel, guys. We're not.
But that's what I mean. These are not this is not Einstein with a PhD. These are normal people that took small calculated risks with their money, surround themselves with a good team, listen to the advice, and it wasn't a sprint. If you notice the
Yeah.
narrative here, the guys that are successful are one every 8 to 10 months,
Slow and steady, baby.
one a year. There's a lot of young guns that come in and go, I'm going to buy 12. And it's like, if you do, you're going to crash and burn. You got to slow down,
Yeah.
and especially if you're buying your first income property ever, do not buy anything big. Buy something small, except that you're going to make a ton of rookie mistakes and they're going to cost you money.
Yep.
But you do your learning on the small one because that rookie mistake to learn it is only going to cost you $500.
Not
You make that same rookie
500,000.
mistake. What's that?
Not 500,000 if
Yeah,
you're jumping into biting off too much.
Exactly. Greg Mayel, all my teammates, with the exception of Jason, I've been working with for anywhere from between 5 years and 18 years. It's a very stable real estate team.
Awesome.
Because we're all rowing in the same direction. Yeah. So like Greg and I, we've got another small turnaround project in the downtown core of Windsor, where we're taking an old 2-story bar and we're putting in 4 residential and keeping like a small cafe area where the original kitchen was. Yeah. So great guy. He does all our larger ICI sales, which are income, commercial, industrial.
Yep.
So he's very, very good at the larger income generating properties. But we have a hard time looking somebody dead in the eye and saying, buy this apartment building at a 2 cap. Buy this commercial plaza at a 2.5 cap. Like, come on, man. Come on, like that's not an investment. You don't come to Windsor for that. You come to Windsor for cash flow. So Greg and I have always had to pivot on the bigger stuff over the years because where the opportunity is shifts with time, right? And right now, and I'm going to get into business sales more, I think, next video if everybody's okay with it.
Cool.
Business sales. What ends up happening is you have a lot of baby boomers right now that want to retire. So their end goal is not the maximization of profits. Their end goal is exit, right? And you've got way more people trying to retire than you have people to buy their businesses.
Yep.
So now it's in your favor, right? In that price point, that 1 million to 5 million range. Now all of a sudden everything's in your favor. There's not enough of you guys to go around. And so we've been busy sort of, we've got about 3 serious clients and maybe about another 6 that are going to start doing this. But what we have them doing is we have them buying businesses that also have the real estate included, right? So what ends up happening is because they're not trying to maximize their money, you're now buying the property, the real estate at a reasonable price. But you're also getting this business that's been around for literally 20, 30 years that's profiting. You don't have to change a thing and it's profiting. If you want to change a thing, if you want to modernize it, for example, because I guarantee they're still working on systems they developed 25 years ago.
Just a little tidbit right there.
Well, for example, this is a pet cremation business that I've got up right now. Don't laugh. It's the only pet cremation business south of Guelph.
Wow.
So all the veterinarians in Sarnia, Windsor,
London,
right, Waterloo. I'm going to plug you, Zach. Waterloo. But they're going to get all the things here, right? And they're all going to get all the animals to cremate here, right? So you don't have the competition, and then there's the value add. You've got Detroit right next door, 5.2 million Americans right next door, right on. There's so many ways to grow that business, but even if you don't, it's a good steady business that comes with a really good piece of real estate.
Interesting. Right? And it's just an interesting strategy that your market may be primed for with the demographic shift, but also with the large economic and industrial and commercial investments that are coming in, right?
Yeah, and you'll find financiers like the Business Development Bank of Canada really want to see people like you buy these businesses, right? So you end up getting really nice loan terms where your down payment, I would be surprised if your down payment is more than that annual profit. If you're getting that annual, if you're getting your money back in the first year, that's a 100% cash on cash return.
Is that good?
Come on, man.
That's great.
So that's it. Tutto finito.
Tutto finito.
Yeah,
so we're looking at small residential deals, relocations, first-time investors, all the way up to converting businesses or investing in businesses in the Windsor area. And Rhys and his team have people specifically dedicated to kind of each market segment to bring you success, whether you're starting, scaling, or building. I learned a lot about Windsor. I learned a lot about some of the big stuff that's kind of happening on the background, on the docket, or just getting wrapped up with the economic and commercial development that I did not know about. And I think that is a huge signal for me as a investor, as a buyer, saying, hey, look, this is not just, a good couple years in the Windsor market. This is, decades of prep and planning, and now it's time to execute. So if you have any questions on the Windsor market, hit us in the comments, email Rhys and his team, info@thevanguardteam.com, or the specific agent you need to get in touch with. If you aren't already subscribed to the Canadian Real Estate channel, I don't know what you're doing. Hit that subscribe button. Leave us a like if you got any good info on this one. And we cannot wait to see you on next month's video. Rhys, really good to see you today. Thank you for bringing the heat. And we'll see you guys on the Canadian Real Estate channel next time.